as has been happening over the past couple live streams, the number of questions that we've received has been way in excess of the allowable time. So we don't do any sales pitches or anything like that. It's 100% Q&A, and we just kind of do a hard stop after 1 hour. And I guess it's a testimony to how hungry people are for accurate information that we're just receiving so many requests. So as a result, what I decided to do is go through some of the questions that we didn't have a chance to cover in the live stream and not give a definitive answer, but speak to the main issues that you should consider as you decide the best way forward and you engage your preferred tax advisors. Okay, so the next question naturally follows from a question that was previously asked. So someone is asking, okay, if it is that the trust as a planning tool, a general planning tool, whether it be for estate planning, probate avoidance, asset protection, tax planning, if it, generally speaking, is not available in Spain and Portugal, what are your alternatives? What are you going to do? That's a fantastic question, and that is definitely beyond the scope of this really short, quick video response. Some advisors, you need to sit with an advisory team that understands the jurisdictions in which you're exposed and would help you create like a joined up action plan. Because sometimes just looking at things in isolation, i.e. focusing on one jurisdiction with being blind to the other jurisdictions in which you're exposed is counterproductive. So you definitely need a cross-disciplinary team, but a cross-jurisdictional team. Generally speaking, however, there are a number of tools. So, for example, some of the advisors that we would deal with in Spain and Portugal, they would advise, well, yeah, you can achieve those aims using a corporate structure. So basically a company, depending on what you're trying to do. Other advisors talk about more exotic planning tools, such as PPLIs or insurance wrappers. PPLIs, private placement life insurance policies, depending on what you're trying to accomplish. Otherwise known as an insurance wrapper. If it is that you're US exposed, however, bear in mind that those tools do have implications. So they may solve for one issue, but they may create not other issues, but other spaces that you need to be very aware of. There may be additional reporting and additional compliance burdens. Additional reporting from an IRS point of view, as well as depending on what you're being structured and the way or the manner in which assets are being transferred into a structure, they may trigger taxes as well. There may be tax implications, not just tax reporting, but tax payments may be due. So just kind of keep that in mind. Another planning tool that is very common in civil law jurisdictions is a usufruct. So we see that very commonly used in Spain, Portugal, and France. So, but basically all Roman civil law jurisdictions, and it's popular in Latin America as well. But we don't do many clients in Latin America. But I'm sure Mexico, Colombia. But anyway, so focus on Spain and Portugal. So there's a usufruct. So what is a usufruct? So essentially, it is an arrangement where an asset, you allow someone legal usage of an asset. So, for example, you may have a home, you may have a holiday home in the south of France, and you may allow someone, a member of your family or close friend, whatever, you want to allow them not just usage of it, but perhaps to rent it out, to manage it on your behalf, or whatever the case may be. So it's a legal arrangement that allows this person to have a large degree of control over it, but they accept it, they can't sell it. But everything else they can do, they can renovate it, they can do whatever, So that's just an example. So it is a common planning tool that we see advisors within Spain, Portugal, France using with clients. However, again, if it is that you are US exposed, please bear in mind that it may have tax consequences. So depending on how that usufruct is structured, it could be considered a trust for US reporting requirements. It could be considered a foreign controlled company, depending on how it's structured. So Form 5471 may be triggered. It may be considered a partnership, 8865. It may be considered a foreign financial asset. So under the 8938 or the statement of foreign financial assets. So there may be other tax reporting requirements that you need to keep in mind. And again, with the IRS, the penalty for non-compliance could be pretty aggressive. So again, takeaway: trusts don't always work in civil law jurisdictions. So you're probably looking at company structures. You're probably looking at some of, if it is, it's worth your while. So it's a quite substantial size estate that you'll be planning for. Perhaps a life insurance wrapper may be what you're looking for, and there's specialist companies like 1291 that look at that, or a Usufruct, which is a common planning tool used by lawyers or legal professionals in the civil law jurisdictions, all of which have U.S. tax consequences. So please do get advice before proceeding. Hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.